I got Travis and Dave with me, so we're gonna talk a little bit about the chapters that they contributed in the Rethink book. You're getting a lot of the Rethink interviews from me in the last few podcasts, but I'm excited for this one because they not only wrote some great chapters, but if you guys don't follow them on social media, highly encourage you to do it. Different takes on it, but they've definitely cracked the code on how to get people engaging in social media. So guys, welcome.
Yeah,
So
thanks
I
so
just want to
much.
start off by just like, how did you guys get involved with this Rethink book? Well, Dave, you want to start with you?
Yeah. So Gemma, one of the main authors, I've known her for years now, and she was like, "I'm gonna put together a book with some big names." Luckily, that included me and Travis as some of the big names, right? And so, yeah, I just volunteered to write two chapters I wanted to, which was about lesser known mortgage options like bank statement loans, 1099, bridge loans, and then just kind of really thinking outside the box type loan options. I think that's the game changer for loan officers now growing their business, more profitable businesses. Learn some of these things. It's not the cookie cutter stuff anymore. I mean, there's people who can build entire careers on specializing in just those things. So,
Travis, how about you?
Yeah, so Megan reached out to me, and I hadn't met her yet, but she was, she followed a lot of the content that James and I are doing, and so she asked me to speak or to write a chapter about something, and so I wanted to write about the power of going with a local loan officer as opposed to going online and just grabbing somebody online or grabbing this massive online lender that you're not going to be able to speak to after hours or on the weekends or holidays. And so that was the whole premise of my chapter, was to just speak to the loan officers like Dave and I, that there are local who are supporting local real estate agents, supporting local, baseball clubs and basketball teams, and the ones that are putting in the time and effort to really be hyper local in your own market. Go support those loan officers because realistically, we can get better rates than those online lenders can anyway, typically, and the service is going to be better.
Yeah. I mean, we preach, I mean, Travis, you've been with us on FinLocker, but we preach the local loan officer all the time. It's just, especially for these first-time home buyers that are coming in. I mean, they're typically in a place where they're not have a big nest egg that they're sitting on, a financial advisor and all of that. So de facto, you kind of become that biggest guidance, financial guidance in their life. So Travis, you talked about, or in your things, it was more about the mortgage strategy than the mortgage rate. So what prompted you to do that, and where do you go into detail on there?
Yeah, I just I just go into detail on on the most important thing is the communication and the service you're going to get from somebody local, right? When you're going with a local loan officer who if something goes haywire on that loan or there's not something you don't understand, you can come into the office and be face to face with us and have a conversation and kind of and understand verbally, again face to face, what the issue is and how we can overcome it. When you're working with an online lender, you're just being, you're getting the approval or the pre-qualification to get sent, and sometimes they send you the denial letter without even having a conversation with you. You have no idea why you were denied, and it could be something as simple as that lender didn't understand your self-employment or where your trust account, your dividends are coming from. So that's why I just always talk about it's so important to be with somebody who's local. Yeah, I'd like to piggyback what Travis is saying. I think the local loan officer is making a massive comeback. I think there was a period where it's like, just go online with Rocket or go use Veterans United, not to name drop, sorry, but and then they had horrible experiences, become known that they're having horrible experiences, or my situation's more involved, or I'm not really sure. And so I think you're seeing, if anything, a large comeback for local lenders because of that service. There's almost too many options, too many issues, and the quality of work by the big names is getting worse.
Yeah, I mean, I completely agree with you. I mean, you think about like if you're going to visit a city, somebody in the city, a local in the city, you ask them for advice before just going and Googling online. I kind of think about it the same way. This is just a much more important decision. I mean, screw up your vacation, that's one thing, but you screw up your biggest purchase of your life,
Yeah.
that's a whole nother thing.
Well, Chris, here's another point. We just, I'm not sure when this is going to air, but we just watched the Super Bowl yesterday, right?
Yeah.
So would you rather your loan officer be advertising on the Super Bowl? Or would you rather them be able to answer your text or your call during the Super Bowl? I think that's the most important thing. Like,
That's a great point.
it speaks volumes to that.
Yeah. So Dave, you alluded to this before, but you kind of go into some of these specialized programs, things for entrepreneurship. I guess my first question is that a big part of your business today? Like, what is that? What sparked you to do this?
Yeah, yeah, it's a big chunk of my business. It's one that I'm known for and I play with a lot. I've been doing non-QM, so bank statement loans before COVID, before it's popular, because I've been in the business over 25 years and I was up and came through during the subprime era where creativity was very valuable, right, on how to structure deals. And so I started to see non-QM unique programs come along and I knew I was like, man, this is going to be massive at some point.
Mhm.
And so I just went all in early and then kind of, I mean, it's one of the things I specialize in. So for sure.
What is, if you have a tip to give loan officers listening now, like how do you go about explaining? Because some of this is more complex, right? A mortgage is already complex to a lot of folks, but how do you go about explaining it in ways that that end consumer can understand easily?
Yeah, I mean, the biggest thing is reassuring them everything's going to be okay. I mean, it sounds funny, but hey, Dave, I run a business. I'm a plumber. Man, I got too many write-offs, right? Or they start to be concerned that they're not going to be able to get approved because they know their stuff is involved. So you reassure them from the beginning, hey, there's a lot of options. We're going to look at all of them, and then we're going to kind of prepare you for what that is, right? And some of them, and we deal with this now and then where, well, the rate's a little bit higher on a bank statement loan. It can be, but how much are you saving on taxes by not having to have less write-offs, report more, pay? That's real money. I'd rather
Yeah.
spend an extra $150 a month on payment than I would want to cough up, I'm sorry, 60 grand in real money coming out of my business to pay taxes, things like that. So that goes back to Travis's great point, local, but it's really an expert and saying, look, I know your situation. I deal with them all the time. Tell stories that confirm your expertise in some examples and say, look, we're going to map it out. Here's the pros and cons, and then go down the line. And once you do that and you win them over, I mean, pretty much like 100% of the time, they're like, great, let's go.
And what they
Yeah.
may find, to just jump on what Dave just said, is that these loans that he's doing in most cases are easier than a VA, FHA, Fannie, Freddie loan because he doesn't have to gather as much documentation and he can close them a little bit faster because they are non-QM. So I think once he's able to express overcome those hurdles that the buyer has, they come back for more and they tell their friends because it's such an easy program that he already has mastered.
Yeah, I mean, just that advice you gave about like, you know, not having to report as much in taxes. I was, as you said that, I was thinking of a couple of friends, and actually one my sister included, where she was given advice to report more on her taxes this coming year for that. And then if you just make that difference in payment, that because they were trying to get the lowest payment, but no one really framed it up as, but you're actually net going to be losing money.
Correct. And you got to think too, that data is always lagging. So as Travis and I know, like sometimes you have to do a 2-year average of tax returns or a 1-year average. Well, those tax returns are already old. So there's examples like right now where we are in 25 or 26, nobody has filed their 25 tax returns. So if you're self-employed, they're going off of 24. Your business could have massively grown in 25 and instead you're stuck with 24's tax returns. And so there's more buying power, more freedom. I mean, it's amazing.
So Travis, when you now we're talking about like for your chapter in the book, just the mortgage plan. So as you go into depths of that, like can you give me a few examples of where you kind of steer your clients?
Well, I think that going back to the local is more powerful. I think that what we do and really good loan officers who have a lot of experience, like Dave and others, they're going to sit down and come up with a plan that's unique to that borrower. So if a borrower comes and talks to us, and I talk about this in the chapter, and then they come in and say, "Hey, I have $250,000 to put down." That's awesome. A lot of buyers don't have that, but we don't look at that and say, a lot of loan officers, and I'm not trying to throw online lenders under the bus, but a lot of them will just say, great, they're putting that down. They don't have a consultation and talk about what that money really is. Once that money's put down, as we all know, it's tough to get that back out, right? You can do a HELOC, you can do things, but it's tough to get that back out. So one of the things we talk about is what if we could take that that $250,000 and take $100,000 of it and pay off these 2 auto loans and these 3 credit cards. And now you're not stuck buying this $400,000 house. You can go get that 4th bedroom you want, or that 2-acre property you want with a shop, because we just use that same amount of money in different ways, unique ways, to pay off debt. And now this borrower has a whole lot less out-of-pocket expenses every month than they did just putting all that money down, right? Now they still have all that debt. So that's why it's really important that they sit down with someone who's experienced local loan officer and have those one-on-one conversations that are unique just to them, and go over their financial portfolio and see what's the best way to use that money.
That's so powerful. I mean, just talking to you guys here, I've obviously talked to a lot of different loan officers, but like I keep saying loan officer, but I just, like, as you're talking, it's like so much of an advisor that you guys are, the services you're offering at that local level, which is great. So I want to shift gears here to what I think a lot of people know you from, and I personally follow you guys, but a little bit into the social media strategy. So we'll get away from the book just for a minute. Dave, you have a really good presence on there. You give a lot of good, just informational stuff. I mean, even Travis is talking about how he loves watching your stuff for the information before we started this. Where is that kind of where you started, or how did you get your start? Was that always going to be your persona type, or?
I mean, I've been doing it for so long. I think I was like every other loan officer starting off, like, anybody please use me, like, kind of more asking. And then I realized you have to build, and I think this is something that's lacking in our industry on a lot of levels, but you're building a business. So for me, I'm Dave, your mortgage guy. That's all of my branding. I built that so that way it's top of mind. And then after that, absolutely. My goal was to give you information all the time, consistently beating home that path, because from a loan officer, either earning the client's business or earning the realtor's business, by showing that I know my stuff and giving so many examples of it, then I become the top choice when maybe it's involved. Maybe they have a question, right? It's not just here's my rates or here's what a bank statement loan looks like. Tell stories. I try to tell stories, and now even in my marketing, even more than ever before, I tell specific stories about loans all the time. The reason why is because if you tell people you do bank statement loans, they just take that at face value. Let's say a realtor. When you tell stories, they connect that story to a client that they have. So like we do bridge loans and then we do bank statement loans, right? And a lot of times I'll combine them. So I'm kind of making like hybrid type situations. Well, the realtor or the client is going to see that video and go, oh, holy crap, that's my situation. Or that's the client situation. So the more you can tell stories, the more you give examples. Hey, this lender denied the loan. Here's how I got it closed. Oh man, Dave's great at loans that got denied by somebody else. And then you get those phone calls, right? And so that was the backbone. And then I liked YouTube. It came natural to me. I like to film once, edit it, put it out. And in that marketing, the idea is to double dip. I think too many times we're not taking advantage that you can get extra mileage out of some of this stuff. So I'll post a YouTube video, but then I'm emailing out that YouTube video to my database. I'm not just hoping that it's on YouTube and somebody finds it. It's too much work to do all this stuff to not get the most mileage you can out of it.
That's a great point. I think a lot of loan officers I talk to kind of forget about that point. Is you can help prime your own pump, right? With driving traffic there. I guess Travis, same question for you. I mean, you and James have a great angle of just bringing some humor into the whole thing. I'm not all of your posts, but I've definitely laughed out loud several times on some of your posts, and love following you for that. But you also get pieces of information. How did you guys come about it, since you're kind of a team doing that?
Yeah, so it all started with us trying to go consumer direct, right? Because we were working with some realtors, 5 years ago that just weren't pleasant to work with. We did a lot of business with them, but weren't really pleasant. And so I thought, okay, I've been doing this for 25 years or 20 years at the time. Like I'm in 25 years as Dave is. And I was thinking, what better way to maybe regroup. And James just retired from the military. So he joined the team. We started a team together, and we've been good friends for 20 years or so. And so I thought, okay, we're going to go all in on social, go all in on consumer direct. Then I realized pretty quick that we just need to work with the right real estate agents. That's really what it was, right? There's some really great real estate agents who have the same values as us and care about the client as much as we do. And so we just went after them. And so that was the unintended consequence of good unintended consequences of us going social, doing all in on social, because we did about 54 million last year in total volume, but 32 to 33 million or so all came from Instagram or relationships we built on social media. So we made a goal last year to do over 1,000 videos or 1,000 posts on Instagram alone. We did about 1,125 on that. And so that brought in a lot of business. And yeah, we did get some consumer direct, but mostly it's relationships we built with real estate partners from that, where we would teach classes on how to do social media. And we taught them all the things we were learning from the programs we were involved with Jeff Zempler and Neil Dingra. So we learned all those things from them and we passed it on to these agents. So that was the key for us is it really impacted how much business we were going to do because we were teaching them how to do it. We were leaving every class we put on with a couple referrals in hand. So it was pretty cool to see on how that just kind of snowballed. As far as the humor part of it, James and I think we're pretty funny. Our wives don't think we're that funny, but our kids definitely don't think we're funny. But we do a lot of funny stuff, and like I was telling you before, I'll just walk into the office and say, James, do this, and he'll do it, not knowing what I'm going to put that to in a video. And he's done the same to me, and he finds out what that video is all about the same time the audience finds out about it, right? So we just try to keep things funny. We probably do 2 funny things. And then 1 talking head, educational post. But yeah, that's just what we try to do. We try to be, as funny as we can and can incorporate that into the mortgage life as well.
That's good. I mean, both of we're, I'm going to hear from both of you is you guys are doing one thing that we preach as well is you're providing value first. You're providing value out there and then it's coming back to you. Yeah.
Well, I think it's super important too to and Dave does the same thing, is that when the consumer comes to you, when they talk to you on the phone or they come into the office, they should already know you. Dave uses YouTube to really go after that. And so they already know, like, and trust him before they even contact him. They've watched him for 3 hours already. So we feel the same thing. When that realtor or that consumer finally comes to us, they've already seen 20 of our videos. And so they already feel like they know us, right? And it's really important to be authentic when they do come into you. Like if they come to the office, they're gonna probably walk in on James and I filming something that's funny and kind of cringy maybe at times. But they're already gonna know who we are, right? When they come to see Dave, they're already gonna know. They've already watched all his videos. So I think it's really important to still be unique in everything you do in your social.
Well, I think to piggyback on Travis, all this work seems like, hey, I'm doing all this work to get leads, right? A lot of this work is going to convert people who are already looking for a lender and they saw your stuff, or they got introduced by the realtor to you and 3 other lenders, but they went and saw Travis's Instagram, my YouTube, et cetera, and then that's what sold them. Or Google reviews. That'd be another example, right? So it's, yes, we're doing all the work to get the leads of somebody saw a video, they called, and now I'm handling their loan. But you're going to convert way more of your leads by doing this work. So it's a double dip, right? Like it's not, there are people who definitely use Travis because they went to his Instagram, they think he's funny. Hey, he's the guy for us, right? I just had a client who chose me because of the Google reviews. She had gotten a list. She's like, man, your reviews are off the chain. I'm going to go with you as a lender. So you got to compound a lot of this work and believe in it. It's a ton of work to do the YouTube. It's a ton of work to do that many Instagram videos. Start with one, keep doing it, and then you see the return over time. I mean, at this point, Travis and I are monsters with the amount of content we've done, but that all started with one really crappy video that we're like, oh, someone's going to watch it, right? And then you build and build and build, and then you get into this, and once you get to this level, there's processes and systems, and it's a lot smoother.
Dave, your platform, like if you had to pick a social media platform to start on, giving advice to loan officers out there, what platform would you pick and why?
All right, I'm gonna get ripped for this probably. The truth that matters, none of them. I would email. Here's why. One is because on email, you have to see me. You have to read it, delete it, unsubscribe, or whatever. We no longer have control, for the most part, on social media. And I do all of the social media stuff, right? So I'm not saying not to, but you're going to be able to get in front of the customer base that you want, let's say realtors, with a message through email, right? So I personally, and I own the Mortgage Nuggets and another email newsletter that goes out to Texas realtors, and so I'm very pro email, but I think it's because I'm going to control that narrative. I'm going to consistently get in front of you and kind of speed up that, and you'd be amazed how many will do some posts, but then they don't do emails, or they'll do, an email a month or some random news. Like, even though this is what I choose and Travis chooses Instagram, probably not to jump ahead on what Travis is going to say, as a loan officer, pick anything. You can crush it on Facebook. You can crush it on TikTok. You can crush it on YouTube. Whatever. Choose one and run with it. And we're almost at a point now where you have to truly admit that one of them is your core. If you're saying I post on all of them, you're not specializing in any of them. Like, I don't specialize in TikTok. I post there, but I don't specialize in it. But I specialize on email.
Oh. Travis, anything to add there?
Yeah, I mean, he's completely right. I think, it's just like everybody always asks, what's the best CRM? Well, the one you use, right?
Yeah, right. Yeah.
So it's the same with social media. If you're killing on TikTok, go kill it. If you're killing on LinkedIn, go kill it. But what I will add is what Dave mentioned about email. I have 20,000 people in my database because I've been doing it for 25 years. I don't even come close to doing what I should be doing and what Dave's mentioning on reaching them via email. But to add what he said, you can also, if you have a database of emails, send the video. So send a video to them, which Dave probably does a ton. So instead of just writing out the email script, he will send a video explaining this new product or this rates where they're at or whatever's happening with a 50-year mortgage or portable mortgage, whatever the case may be. So he can explain that. So email marketing, he is absolutely right, is the number one source. I need to utilize that more, right? But I will say with social media, whichever one you use, the most important thing you can do isn't going to be posting a lot or just going and liking things. The most important thing you can do is outward engagement and interacting with other people's posts, right? So if you see, in our business, our consumer, our client is the real estate agent, right? I mean, we have the buyer that's our client, but our client is the real estate agent or referral partner, whichever referral sources you use. So it's really important for you to be outwardly engaging on all of their content. Because even, Chris, if you were not following us and I was following you on Instagram and you were posting a bunch of stuff and I went and started interacting with your stuff and posting genuine comments, not just a fire emoji, but posting, hey, Chris, that's an awesome house. When's it coming on the market? Or, whatever I want to say, but genuinely commenting on it. And then if you post that to your story and I come and comment on your story, well, that goes to your DMs. So now the algorithm thinks that there's this direct correlation between me and you, even though you don't follow me, but I follow you. And now it's going to put my next couple of things in front of you, right? So those things are super important. I think outward engagement on whatever platform you're on is the key. So go out there and comment on the people you want to do business with, interact with them. That's the most important thing. Don't just post and ghost your stuff, but actually engage in others.
That's fantastic advice. So I won't keep you guys too much longer. Just, is there any last minute tips? If you're talking, a loan officer watching this, still on the fence, maybe you've tested the waters a little bit about doing social or videos or outreach, what would be the tip of advice you'd give to them?
I'll go first. Just do it. Like Dave mentioned this, no one's like, it was moronic for me to try 1,000 videos in a year, and we're going to do it again this year, and it's still moronic for us to try it. We're going to do it again. But we didn't start that way. We started with 3 videos or 3 posts a week. That's all you have to do. Start with that. Just do, if you can only do 1 a week, do 1 a week, but just be consistent with whatever you want to do, and just get started on it. We talked about this. We were at Mortgage Con and we got the opportunity and honor to speak for a couple minutes on stage. But we talked about this there. It doesn't matter. Our first 150 videos were just garbage. We go back and look at it now. We're like, oh boy, that was bad. But people still interacted with it. They liked it. And again, we're two upper 40-year-old dudes who just jumped all in on social media. Like anybody could do it. So, and we say this all the time. But if you're a real estate agent and somebody was to ask you, someone wants to call you and say, hey, I want to go make an offer on 123 Main Street today. You're not going to say, dang, I need to lose 5 more pounds, or hey, my hair's getting done on Thursday. Can we wait till then? No, you're going to jump out the door in your sweats and your sweatshirt and go make an offer on that house with that buyer. Like it's the same with social media. Just post it. You are who you are. You look like what you look like. You sound like what you sound like. Just post it.
So, Dave, anything to add there?
Yeah, a couple of things. One, Travis brought up, but the 3 of us have fantastic haircuts. I'd like to point that out, that it's amazing hair. I'm like looking at Travis' hair. I'm like, man, that's pretty much what my stuff's going to look like when I go gray. So I'm actually pretty excited after this. So, no, a couple of things. One, obviously I'm plugging it because I write it for loan officers. Sign up and read the Mortgage Nuggets. You've got to know what's going on in the industry so you have talking points. I always make the joke, you should never go to a coffee appointment without something to talk about if you're receiving the nugget, right?
Yep.
Buyers, sellers, things like that. The other thing I'll tell you is we have to dummy down what we consider successful. I look at Travis. I mean, his Instagram's legendary. I'm never going to get there. That's not my goal. As a loan officer, you can't look at somebody who's doing what Travis is doing or myself. Simplify it to this. If you do one video or one email and it gets you one lead and you close that deal and you made $3,000, $5,000, it is the greatest post or email you have ever seen in your entire life. And that's your only goal, right? It's not to be at the level that what we think is successful. Find your own path, but know that you just have to get the leads from doing this work. Once you get the leads, you're off and running.
Beautiful. I love it, guys. Thank you so much for taking your time out of your day to get on here and give some advice to our audience. We appreciate you, and we'll talking soon.
Thanks, Chris. Thanks, Dave. See ya.
Thanks, guys.